All right, we're going to talk some about this. Let's bring in our two experts, Steve Moore, Committee to Unleash Prosperity Hotline and host of More Money on WABC Radio, and Arthur Laffer, former Reagan economist and author of Taxes Have Consequences. Arthur, I think Powell got it right today, even though it's a Rorschach test. You read into them whatever you want. And Broadway shows have many acts, not just one act. But the fact is, all these price level indicators are going up. And I think the Fed is right, at least for the moment. Why should they cut interest rates? What do you think?
Well, I don't think they should cut interest rates at all. And excuse me, I got a little cold, but they shouldn't. But, you know, what really bothered me about his report is he's promising 3 cuts in the future this year, which really is inappropriate until we get more data. But these numbers are not good for inflation, Larry, as you point out. They really aren't. And if you look at the dollar versus Bitcoin, you look at the dollar versus gold, it's been falling dramatically there as well. And there's no real boom in this economy. It's just not happening. So that's where I'm sitting.
Ah, good. Steve Moore, I don't think they should cut rates at all this year. I mean, inflation has not come down to 2%. I don't think they should. And this is an election year, as we all know, regularly scheduled election November 5th, although one can never tell in this country anymore. But the fact remains, if the Fed starts slashing interest rates and slamming the foot down the pedal on the accelerator, everybody's going to accuse them playing politics, which they would be playing politics, which would not be healthy for the Fed's health.
Yeah, you know, I was reading some of the headlines right after Jerome Powell made his statement, and a lot of the headlines were, you know, the Fed won't, cut rates now, but they're going to cut them 2 or 3 times later in the year. And I think that's one of the reasons for this euphoria that we're seeing on Wall Street. But, you know, I'm looking at the same numbers you and Arthur are looking at, and I don't see the progress. I mean, these numbers are very troubling to me, especially what's happening with commodities. Look at Bitcoin. It fell today, but, I mean, Bitcoin's up double. That's a hedge against a falling dollar. Arthur Laffer taught me that the gold is a hedge against a dollar losing its value. So why are those things up so much? The other thing is that I did look at the Larry Summers study, and it actually answers the question I've been wondering about, which is when you look at mortgage payments, Larry, on an average 30-year mortgage, those payments are almost 80% higher than they were when Trump was president, 75 to 80%. And what Larry Summers' study is saying is those numbers aren't being computed into the actual CPI number. So I think inflation is probably a little bit worse than the official numbers are indicating.
Could be much worse. Look, no, they took the mortgage costs out. Right. They took the car loan costs out. I don't think they ever had the credit card stuff in there, but we're going to put it up on the full screen. I don't know if you guys can see it or not, but Summers reconstructed the CPI based on what he thinks would be pre-1983. So the peak in inflation was not 9%. It was actually 18%. Right. And yes, it's come down, but according to his chart, through last November, it's still at 7%. Which is very interesting because all these borrowing costs are very high, and it is strangling consumers. And, you know, Arthur, that helps explain, first of all, even with lower inflation, Joe Biden's approval rating on the economy is rock bottom. And you can see the consumer sentiment indexes, you know, they're running like 90, 95, but in the middle of the Trump term, they were 140. So the consumer sentiment is very bad anyway. And part of this is, yes, cumulatively, the level of prices has gone up 18 or 20%. But borrowing costs are killing people, Art.
Yeah, I got to say first, Larry, just how happy I am to be on with you and Steve. How much fun to get the 3 of us together. It's just wonderful. The 3 Musketeers, I guess we could be called. No, I agree with you, Larry, and I don't think the economy is as strong as Powell thinks it is either. When I look at the economy, employment to population, it's a very low number. I know the unemployment rate's low, but the employment to population is low. And as Steve pointed out, gold prices are really, really high. They're the highest they've been in a long, long time, over $2,200 an ounce, by the way. And not only that, but Bitcoin, I mean, just skyrocketed. These are alternative monies in the marketplace. So people are voting against the U.S. dollar, and that's a bad sign for the Fed. They don't need to be lowering rates and causing this to go on. They really don't.
All right, I want to switch gears. Stay with the economy. But Steve Moore's good friend, Senator Elizabeth Warren, was out recently. And she is promoting the Ultra Millionaire Tax Act, okay? In fact, do we have a full screen or is it sound? We have a full screen, so I'll get to read this. All right, put it up there and I'll read it. And, okay. All right, I can't really hardly say. I'll just read this here. As President Biden says, no one thinks it's fair that Jeff Bezos gets enough tax loopholes that he pays a lower rate than a public school teacher. All my bill is asking is that when you make it bigger than $50 million, then on the next dollar you pitch in 2 cents so everyone else can have a chance. So Steve Moore, there they go again. Now it's Elizabeth Warren. I mean, no surprise. She once told me on another show on a different network that she was really a capitalist, but I didn't buy it then and I ain't buying it now. The point is, all these Democrats, including Joe Biden, you had in the hotline, Joe Biden wants to raise every tax there is. Income tax, corporate tax, small business tax, capital gains tax, dividend tax, unrealized capital gains tax, Steve Moore. So in a sense, Elizabeth Warren's just piling on. I don't know why. What would happen if you had this? What would happen if you did this?
Well, first of all, wealth taxes is just a tax on savings, and we want people to save. Saving is what provides the seed corn for investment. Now, let me just give you an example, because Laffer and I have done a new analysis of what's happening in the states, where you have a number of states that have these wealth taxes, and they're a disaster, Larry. People are leaving these states, and they're going to places that have more sensible tax systems. But let me just say, let's assume, I think Elizabeth Warren has proposed a 2 or 3% annual wealth tax. Mm-hmm. Well, you pay that tax year after year after year after year. So after 10 years of paying this wealth tax, you've just taken away 30% of someone's wealth. I mean, it is nuts. Nobody's going to save in this country. If they do save, they'll move to Bermuda to avoid these massive taxes.
Whatever happened to free market capitalism? Whatever happened to supply side incentives? The Laffer curve. What's wrong with these people? I mean, I think it's time to retire all of them, Arthur. I do. And Arthur, take a couple Tylenol every 4 hours and take some Flonase. That'll really help. I had this cold for 6 weeks. It's very hard to get out of here. Steve Moore, thank you for your tax hikes. Art Laffer, get well soon.